In this video, I wanted to address the question of where is the most ideal point to place your stop. A lot of times the question comes up, you enter a position and what to do with your stop. We all know that stops are important. Stops help limit our losses and get us out of the trade when necessary. But where is the most ideal point to place your stop? So I have two methods that I use and that I've found to be really ideal for both day trading or swing trading. So if we take a look at the ES, the E-mini S&P in front of us here, using a simple breakout strategy for entering, buying above the high of this low bar, in this example, you can go ahead and place your stop below the low. Anytime you have an entry near a high or a low, placing your stop a tick outside that high or low, or a pip outside that high or low, if you're looking at currency futures, is usually a pretty safe bet to establish an initial stop. This allows for the stop to be rather tight at the onset of the trade, but at the same time gives you a little bit of room for the trade to develop. And then once the trade begins to take shape, you can trail in a couple of ways. The first way, a little bit more aggressive way to trail your stop, would be under each candle. As we begin to move higher, as we break out of highs, you can trail your stop under each candle's low if you're long. A little bit more conservative way would be to wait till we get a pullback and then begin to rally into new highs if you're long, and move your stop from your initial placement up underneath the prior swing low, and continue to do that under each swing low until the stop gets taken out. So for me, the ideal point to place the stop initially is really just a tick or a pip outside prior highs or lows. And the same concept works for a daily chart. So if I were to flip over to a daily chart of the ES, I'm going to go ahead and turn on 24 hours worth of data and just zoom in a little bit. If we were to look at any of these setups down here, buying above the high of the low bar, in this case because we're in an uptrend, if you are simply using an initial stop a tick below the low of that entry candle, you can simply wait for a pullback to occur and then a breakout to new highs, and then move your stop from underneath the low of the entry candle to underneath the low of the next swing low. And you can continue to do that up underneath the next swing low, which happens to be a little double bottom. Once we break highs, pull back, and break highs again, you can move your stop from underneath this swing low to the next swing low. And then finally, this last swing low up here at 43.50s, which is where you would have been taken out of the position. So that's a little bit more conservative way, waiting for the pullback, waiting for that breakout of new highs, and then moving your stop from underneath the initial signal bar to that prior, or to that next swing low. So both intraday trading and day trading, I'll use one of those two methods. Again, a little bit more aggressive way is to trail each candle. If you're long, trailing the prior candle's low. If you're short, trailing the prior candle's high. And a little bit more conservative way is to wait for that pullback or wait for that bounce and then form that new higher low or lower high before moving your stop up. So to me, that's the ideal point to place my stop at both the onset and the trailing of my stop, because that allows for the market to tell me when the momentum is changing, when the direction is changing, and I'm not constricted to some arbitrary profit target or subjective point in the market to exit. A lot of times we may say to ourselves, well, we have some resistance above us up here, and so at this point I think I'm going to close the trade. Well, what happens? The market pulls back and you're stuck trying to get into the position again. Sometimes it works out, sometimes there's not another entry signal. It can be profitable to certainly scale out of positions, but I've found that the bulk of the position, the bulk of your profit is made in that runner, in that larger move. So while it can be, advantageous to take some off the table at a smaller profit target and perhaps at a resistance or support level, I found that, leaving a bulk of the position on and trailing your stop underneath the swing highs or swing lows or underneath each candle to be a little bit more aggressive, or a combination of the two, is really the ideal point to place your stop when swing trading or day trading the futures market. So I hope that was helpful, and I hope you have a great day.